So I wanted to put this up. To talk about what's going on with commodities. So there's two commodities in particular we're going to talk about: crude and nat gas. So when you're looking at crude futures, right, and this kind of helps to understand why calendar spreads or diagonals might necessarily not be always great trades in names that sort of follow these products. So this stems from somebody that I know who recently traded a diagonal spread in I think it was UNG, right? UNG obviously follows if you look at the prospectus on UNG, it kind of gives you an idea of what is actually trading in UNG and how it comes up with the value that it's trading. And of course, it uses UNG's natural gas, which we'll look at in a second. But let me start by explaining crude oil. So this is the crude oil futures, right? Looking at March being the front month, April and May afterwards. Now, those front 3 months are it's considered to be in contango, where the near-term future is trading lower than the next-term future, right? After that, you can see this thing kind of trails off. When oil was going completely crazy last year, and for those who watched the show, you know I put a lot of these forward curves up for futures. When oil was really moving the way it was moving last year, it was really volatile, and usually when a commodity is really volatile, it's in backwardation, meaning not looking like this, meaning all of the futures, like in a backwardation situation, the March future will be trading higher than the April, which will be trading higher than May, which will be trading higher than the June, and so on and so forth. In this case, we see there's more of a little contango in the front, meaning it's a lot calmer than it normally is. And the reason you can see this in the stock price, or I should say in the futures price. When you look at oil right now, it's sitting around 80, 81, 82, 79, like somewhere around there. It's been really quiet, right? For those of you who watched Futures Power Hour, you saw me and Chris Vecchio talk about oil. It's been around the 80 level for quite some time, and it's been fairly quiet. And this futures curve speaks towards that. Let's move to the next slide. Now, this is the natural gas forward curve. Natural gas has just been plumbing through lows for the past month and change now. And oddly enough, you can see the February future is currently poking up a little bit to the upside. This is actually trading above the March future. This is really kind of a funky curve. But those front 2 months are basically trading in backwardation. After that, basically it looks like, I'd say, you know, between March and July is somewhat of let's say March and June is somewhat of a flat curve. You know, July to January of next year is basically, I don't know, I guess you could say it's actually flat across the curve from March of this year to October. Let's just say that. And then obviously October through January of next year is basically in contango. So really kind of a weird curve. You got a little bit of backwardation in the front, kind of flat across the curve, little contango in the back of this curve. But my point is looking at February, March, you would not really want to trade a calendar spread in this. Because you not want to be long a calendar spread in this, because that means you're selling the front month and you're buying the next month. But if the front month continues to go higher, you're not going to win on that trade. You know what I mean? Front month has a higher beta to the futures, and so the front month is going to be more bid than the next month. So if you're selling that front month, you're not necessarily going to win on that trade, right? And I believe UNG is a product that sort of replicates this curve. Now you have to look at in the prospectus, and it'll show you which futures is tracking. I don't remember off the top of my head, but you guys can do that on your own, I'm sure, of course. So this is one of those reasons where a lot of times you may be interested in sort of like, say, Microsoft, for example, coming out with earnings tonight, which we're going to look at in a second. Interesting maybe to trade a long calendar spread in that, or where you're selling the front month and buying the next month, because you expect the front month volatility to collapse, right? But in a lot of commodity products, front month is not necessarily going to collapse as hard as you would expect. So just keep that in mind.